Welcome to the London session recap for Thursday the 5th, is it? 5th of October 2023 for Euro Dollar. So daily chart, we obviously are bearish. After the boss, at some point we can expect a deeper swing pullback. We have these levels of liquidity that we're taking out that potentially may start that. Otherwise, we have this next POI a little bit further down, but let's just keep things simple and we can look to just try and keep following this immediate daily bearish order flow until otherwise, right? Until it fails. Once it fails and we get that convincing shift in order flow, then we can start thinking about potentially playing that longer term daily pullback. But it will be pretty obvious when that starts to happen. And obviously that will be confirmed by how the 4-hour chart is moving as well. Because as we can see, we are just very clearly and simply bearish. So we're finally getting that 4-hour swing pullback after that boss where we got that bullish change of character yesterday with a very decent amount of momentum. So we have pulled back up to the EQ of the range, getting towards those premium prices, but we haven't really mitigated any significant supply, right? We have these tiny little buy to sell wicks. That's not typically where you would expect a 4-hour lower high to form from, and also just the way price action looks like with that almost impulsive move up. I'll just expect usually this would be a bit of a corrective pullback and then another leg higher. Doesn't mean that will definitely happen. That's just typically what I would expect to happen. And then potentially if we reach a level like this, then we can start thinking about that next movement. So my primary forecast for the 4-hour chart for I guess today and tomorrow would be we might get a bit of a correction, potentially moving back into this demand, and then we'd be looking for a move higher. But of course, like I keep saying, anything can happen. So if I zoom out a little bit, we can see the 4-hour swing range that I just spoke about, right, at this level here. So the M15 structure, whether you've called it swing or internal, it doesn't massively matter, but the M15 structure has shifted bullish to do what? To facilitate that 4-hour pullback, right? So we're expecting bullish M15 structure all the way up, ideally up towards this level of premium supply. And then if the 4-hour swing structure is going to stay bearish, what would we then expect? We would expect the M15 structure to shift bearish, signaling the end of this 4-hour swing pullback, right? And then we would follow those bearish M15 ranges until it takes out the new 4-hour low, right? That's the framework, the structural framework in which we follow. So M15 swing structure expectations is quite simple in that regard. I'm expecting it probably to stay bullish for at least another leg to get up to those premium levels. That would be my primary expectation. Doesn't have to happen. Again, primary forecast, okay? Especially as it's the first boss, okay? So usually, you're going to probably get at least one more leg because we're not, we haven't mitigated anything that significant to the left just yet. So that's quite simple. But when we get into the internal structure of the M15 swing range, it gets a little bit more complex, okay? So what I'm actually going to do is I'm going to delete all of this because I think it might be a bit easier to visualize of what's going on here. Okay, it took me ages to put those pretty little circles on for you guys, but I think it'll be worthwhile going from a blank chart. So let's do this properly. Let's do a few arrows. So we use that for, okay, so let's make this a bit thicker. So swing structure, our expectation, right, is something like this, and then another leg, all right? That's nice and simple, okay? Now, if I draw another one, let's change this to blue, make it a bit thinner, okay? So within that, we have the sort of, let's call it our first layer of internal structure, right? Our large internal structure. And if we map it kind of from that previous leg, we had a pullback here, we had that bullish IBOS to the upside, right? And then we had a bearish IBOS here. So our expectation, or another way to put it, is what is the objective of this large internal structure? Its objective is to facilitate the swing pullback. So its job is to facilitate this black line pullback. So typically what we'd expect is it would shift bearish. That signals the start of the swing pullback. Therefore, we would then follow that large bearish internal structure, usually until we mitigate some demand, right? That would then be the end of the swing pullback, the black line. When we see the bullish IBOS, right, then the internal structure would realign itself with the swing structure, and that's what we would look for typically. So let me do this up a little bit. So with the structure that we have to work with, if we map it like that, what we have so far is one bearish IBOS to the downside. So at this point, we've had that bearish IBOS here. This is our strong M15 internal high, right? So if that bearish M15 internal structure is going to continue, then we pull back up to this high. This high would then need to hold, right? And then we would expect another leg to the downside, Okay, so the blue trend is the large internal trend. That's now bearish. We pull back up to its high. So if that's going to continue, we may get another leg to the downside and target this low here because it's a weak low. Because you can see this low did not break any structure so far in this leg. Okay, so just from a blue structure perspective, that large internal structure, we could potentially expect another leg down before then we get the movement for the next movement, okay? So that's kind of one expectation of what could happen with the internal structure because we don't have a confirmed strong low yet, right? Because all we have so far to work with that structure is a bearish IBOS. Now within that, we can see that we have internal structure, right? So this is again where it gets a little bit confusing. Don't worry, I'm going to clear this all up at the end and try and simplify it for you, but I think it's good to kind of go into the details of it here. So we have our black swing structure, we have our blue large internal structure, and then within the internal range, we have our green small internal structure, right? So this would be the movement up, this would be the pullback. Hopefully you guys can kind of see that on the chart. And then we have another leg up, okay? Whoops. So the small internal structure, the green structure, is bullish because its job is to facilitate the pullback of the large internal structure, right? So the green, I know this is confusing all these different names. The small internal structure's job is to facilitate the large internal pullback. If the large internal pullback has come up to the place we'd expect it to hold, and we're expecting that next leg, then this is where then we can expect the green structure to then shift bearish to get that next movement down, okay? I thought drawing all these lines would help explain it, but it does sometimes make it feel unnecessarily complicated, but I don't know how else to kind of visualize that for you, but hopefully you guys are kind of following. So in summary, M15 swing is bullish, the large internal is bearish, and the small internal is bullish, okay? So it's confusing as to know, is this small internal basically going to stay bullish, and are we just going to get a nice simple movement? That would be, you know, really nice and simple, but we have to be aware that this is the larger internal structure. We pull back up to the high, and that could be ready to give that next leg. So what would confirm this idea that we are going to get that next leg would be if we got that small, if we got that small bearish IBOS, which would be here, right? So if we got the break of that, then that would confirm obviously the end of this pullback, and then we would start that movement down. Okay, hopefully if you guys have watched 3 types of structure lessons, you should be pretty comfortable with that idea. So when I get to my desk and I see this, it's a bit tricky to know, like I was saying, what we're saying. We've obviously pulled back to the discount. We've mitigated discount demand. We have a nice bullish movement, and we've started to form kind of that clear bullish structure within here. So that was why it's making me think, okay, I'm kind of willing to ignore the larger internal structure and kind of just follow the structure that's forming cautiously and see if we'll get that next leg and see if it will keep simple. Especially because of the bigger picture, right? We haven't, you know, it's not in an area in which I think that this is going to be that next movement. I could be wrong, but because we haven't mitigated any supply to the left, it's that first initial swing boss. If we pull back to the discount, I'm basically just thinking, this is what's in my mind. I feel like the more probable scenario would be that we pull back to discount, the swing high low is probably in place, and we may be ready to go. Therefore, let's see if we can follow the small internal structure. That's probably a much more simple way of explaining it, right? It's just when you have the true understanding of structure, we also know that this is a strong internal high because it broke this low. This is a corrective pullback, and we could be getting another leg. Of course, the overall hard times are very, very bearish, so that dollar strength could be continuing. So hopefully I haven't lost you there too much. Unfortunately, that's just why sometimes we get these tricky conflicting signals with structure, okay? So prices pull back up to that strong internal high, which is our weak swing high. So, you know, we'll have to see what happens next. If we want to play the idea that this small internal structure is going to hold and we're going to go, then this is really the only place we can do it because this is the bottom of that small range and this is the only POI we have, right? All of this is mitigated here. So this would be the small range. Okay, so this is a small, strong internal low, but we know that this ultimately is weak. So there is some risk we could go. So I'm cautiously looking to see if we could get longs from here. Obviously this is a straight push. There's no lid, there's no leg inducement in the leg. So we know that if nothing convincing, you know, no strong liquidity is built to the right, then the only available strong liquidity can be behind the low itself. Also, these are the Asia lows. These lows here. So we know, especially with those nice equal lows like that, they can definitely be used as liquidity. So it's just another reason as to be cautious around this POI. So as the session opens, I should say, we drop around a little bit and then we start moving down towards the zone with a decent amount of momentum. Now, if you draw on the range, we do get a mitigation at this point. So, you know, you're well within your rights to look on a lower time frame for potential entries. So we have our M15 mitigation. Do we have a strong liquidation? Did this low here achieve anything? Yes, it did cause a bullish M1 change of character. So technically now we have our available strong liquidity. But what do we need to see? We need to see the PBL fail if we are going to use it. And this is where the clear supply came in to liquidate that low. Okay, so we would need to see this zone fail and obviously a bullish chock if we want to use that as liquidity entry model 2A. We push deeper into the zone. We don't build any strong liquidity yet. We start moving up. So now we've had another break of M1 fractal structure. So this could be another potential entry model lower down that we could use if we were interested in taking longs from this POI. So this would be your freight break level. Price then comes down. It doesn't break the low, leaves those perfect equal lows on this data feed, and then it kind of just correctively starts to pull back. Now at this point, we do technically have an M1 PBL fail, right? So, you know, you could be looking at this as a potential entry from the liquidity that was taken here, okay? So it's basically saying this was the fake break, that's been liquidated, and now we've waited for the PBL to fail. But can you see if you just kind of delete your analysis for a minute and just look at the bigger picture? Can you see that that order flow hasn't really shifted yet? Down movement, up movement, down movement, up movement. So technically we have had, you know, the M15 mitigation, and the moment that price trades through that PBL, we do have a PBL fail. So if you are 100% mechanical and you just, you know, ticking the boxes on your entry checklist, then yes, technically there is a liquidity entry model 2A now playing out. You know, the extremes basically mitigate. This is all a bit messy, so really you're going to probably enter somewhere within this here. So I can understand the logic behind it. Perhaps on another day it may have played out. In this scenario, this is where I'm just more than willing to be patient. I already have doubts, primarily because of how the internal structure is, buying at the premium range and around this POI as well that I explained, right? It's the Asia lows behind it, straight push, etc. But very simply, this is where the M5 helps me out a ton, and I use it a lot to my advantage. And that's just saying this, right? We've just sold off pretty aggressively since session open. And where are we now? We just pull back up into here. So this is when literally, you have to make the decision in the moment before it happens. Like before that PBL had even failed on the M1 and we started moving up, I already said to myself, like, if that PBL fails, I'm not getting involved, right? I'm waiting for this to fail. And if that means that we do this and I miss the move, then so be it. And that's why I say, you know, kind of make that decision before the PBL fails so that you kind of don't get FOMO when you see something potentially setting up. So for me, it was a very simple decision in this moment. I accepted that I can miss the move and I'd rather wait for that to fail than hopefully, you know, we get a pullback and then see if we get the long. So it's not to say that you can, you know, you should never trade against M5 order flow, but this is just, I'm just giving you something else to consider and look at to help you in your decision making, right? So there's a lesson called trading against order flow in the order flow module in the course, and highly recommend watching it. And basically what that says is, like, if you've got the market moving to the downside on whatever time frame you want to look at, let's make this a bit thicker. Okay, and you've got like a clear, you know, this is that last clear supply range. Let's just imagine this is the M5 or the M15, but you're looking like on your lower time frame down here. Right, so imagine we get our mitigation down here into our M15 demand, and then you get your entry model. Let's say we get equals like this, and then price moves up. Like, if you're not tagged into the trade, if you're just leaving an order here, price pulls back up to this essentially strong M5 or M15 high into supply, and then starts coming down. What are you doing? You're trading against order flow. You're buying from a weak low that failed to take out the high. So this is why if we're going to trade against that order flow, ideally we want to get tagged in here. We want to be in the trade so that when it moves up to the strong high and it moves up to supply, then we can either take profits or we can remove our risk so that if the supply holds and we come down, it's no biggie. It's a break even or we're already out of the trade. Okay, that's the most ideal way in which we want to trade against the M5 or the M15 order flow, is we want to get in and play the start of that M5/M15 leg, and you know, we're already in and out. We don't want to be setting our order here, watching price come up to here and then start coming back down, because now we're buying against this. So it's not to say that that can't play out, but I would only really do that in very high probability areas. So it's not the worst area in the world in which you're buying from. Obviously from an M15 perspective, like it's the extreme of this small internal range. It could hold, it could go up. So that's why I was saying to the guys who took it, like, don't overthink the loss. It's not the worst trade in the world by far. I'm just explaining kind of how I saw things, and if you look on the M5, it was just very clear to me. I just wanted to see that high go, okay? And this is how you can think about the order flow thing. So if you don't get tagged in straight away down here, and price like literally pulls up all the way up here and starts coming down, a lot of the times I'm not going to want to trade against that. So either wait for it to be confirmed failed, like this, we actually get the shift, then you'll have a fresh new M5 or M15 demand. That's going to be the higher probable trade. Or you just wait for it to go, get rid of these lines, right? And then what you might get is like, because it's probably like an M1 shock here, right? So this will be a new fake break, and then you can get like a little sweep within here, and then you're in again. Sorry, it's a little bit laggy. You're in here. Rather than trying to buy after we've hit that high again, price is coming down, and then you're leaving your order on, right? Because what are you fighting? You're fighting the overall clearer and larger bearish order flow. So we want to be getting in around these areas to play, right, the start of this move here, not after supply has been mitigated. But I explained that in a lot more depth in the trading against order flow lesson, but I just thought it'd be good to go over here. So again, you know, it's down to you as an individual trader whether or not you want to trade against that. Sometimes it's going to play out, sometimes it's not. Also, just the way in which this all formed, my textbook entries don't really look like this. You know, it's all just kind of this like messy chain. It barely breaks the PBL. Like it's in the middle of this leg against supply. That's just not how generally I look to take. You know, my best positions don't look like that. Cool. So yeah, if you took it, it's a loss. It is what it is. I really wouldn't overthink it too much, but I've kind of made my thoughts clear. So even at this point, I'm just not interested. I want to see. Can you see the clear structure without even looking at another time frame? You can see it. I just want to see this now shift. Unless, right, that's what I'm saying. The only other way option is if you got like a clean entry down here and the supply is like, I don't know why this is so laggy, but this supply is really far away, which obviously isn't in this scenario, okay? So we now get this fake break liquidation down here, so you could be interested in this potentially. Again, if you want to trade against that M5 order flow. The PBL, I would have been looking at this one here because this is the clear pivot that leads to the break of the low. You could potentially look at this buy to sell candle here. It's technically not a fractal pullback, right? Because all those candles break the previous candle's low, but it is kind of that clear buy to sell that breaks the low. So I can understand if you use that as your PBL, but the chalk is all the way up here anyway. So you're going to have to wait for this one to fail if you're interested in trading that. So it kind of makes the decision easy for you. And then the POI itself fails. So again, if you follow the rules that we suggest, as soon as the POI fails, liquidity entry model 2 is no longer valid, right? And that is where the only entry models you can now consider it is liquidity entry model 1, right? But that requires a new M15 POI below, which we don't have. So really the only option you now have left, if you want to play this, is liquidity entry model 4, okay? So we just go up to the M15 for a second. This is where you have this low here, okay? And you're playing a sweep of this POI, right? Which isn't a bad idea. It's the equal Asia lows. You know, potentially we could get those longs now to the upside. But this was a bit subtle, but both of these candles are equal lows, 048 and 048. So this means that this is an M15 fractal high. And yes, technically it's not the true fractal high because this was all one straight leg, right? So the true fractal low is here and the true fractal high is here. You are correct. So you can call this an iChalk if you prefer, right? I'm just looking at where is the immediate fractal price action within here, right? To help me. So, right, don't get too mechanical about that, okay? This is just a little structural signal to show you that the immediate fractal structure is shifting back in the bullish direction, okay? So this is what I was waiting to fail. I just wanted to see price go up above that. It's even more clear in the M5 as to why, okay? We have that clear M5 bearish order flow that I'm just looking to go. But if you want to get in before that and you want to trade against this, in case we get a mitigation of that and go, then the way which you could do that is looking for liquidity entry model 4 here on the M1. So this is the PBL that liquidated that level, right? So you want to see this fail. Obviously get your M1 shock here too. And there we go. So PBL fell, chalk, and that would be liquidity entry model 4 if you wanted to trade it against, like I keep saying, this bearish order flow. I just was sitting on my hands at this point. So how you draw your POI on this, again, I try and say don't over refine too much, especially on the M1. If you just want to try and get involved, you don't want to keep getting no tags. When you get a thrust candle like this is where you can, as I say, don't just draw it in the pivot. I mean, you can do, or the mechanical way to deal with those, this type of scenario is to draw the zone on all the candles to the left on that in that sell to buy movement that this thrust candle closes by. So what I mean by that is this is that sell, right, to buy movement. This thrust candle closes above all three of these candles. So that's that whole sell to buy demand range. Whether you want to include all three is up to you. We spoke about this the other day. I would kind of just say, if you want to use this rule, just use 2 for now. Just always draw it on the 2 candles. That's typically what I do. That's obviously the sell to buy candle as well. If you use that strict method like Tomas does, he always draws his demand zones on the bearish candle, right? And then if you want to be a little bit more refined, of course, you could then use the 25%. There's a few different mechanical ways you can cut it. It's up to you what option you want to pick. Unfortunately, price, I believe, does not tag you in. It pulls back, mitigates the kind of the top of that range, I think. Yeah, so the 3 candles there, and then goes. It is what it is. And then price starts pushing up. So this is not relevant PBL anymore, really, because that's for these equal lows, and the fake break, which is no longer valid because the POI has failed, right? So this is the PBL we're interested in. Now, if you're just kind of a bit patient and you just keep things nice and simple, you can save yourself all of a bit of a headache there with all of that M1 price action. And this is what you wait for. So basically, we have question marks around whether or not this small internal structure is going to stay bullish. Sorry, I don't know why this is so laggy. Whether or not this internal structure is going to stay bullish, right, for another leg here to the upside. We also have a few question marks around this POI because of the straight push and the Asia equal lows behind it. Since session open, we just get clear bearish order flow, and none of the M1 entries gave you a clear opportunity to get in before price to pull back up to that M5 order flow. The POI then fails, right? So even more of a warning sign that potentially we're going to head lower. So I personally wouldn't want to be aggressive here on the M1. But then what happens? Then we get a clear, nice big bullish momentum, Morningstar formation in the M15, bullish M15 chalk. First sign that M15 order flow, or the immediate order flow, is starting to shift back bullish. This then creates a fresh M15 demand zone that leads to that bullish change of character. This is even clearer on the M5. You see how just simple it is now to just wait for that. So M15 sweep confirms, M15 PBL fail, right? M15 chalk creates fresh M15 demand. And it's go time. So now you can either look for a new entry model within here on the M5 or the M1. On the M5 it's obviously going to be very, very tight. Or now you can play the M5 liquidity entry model 4. Okay, so this is the M5 PBL that liquidated that M15 POI. It's now clearly failed, V-shaped reaction. There's no flip, so you enter on the extreme. And this for me had a lot more confluence than anything on the M1 now, right? Because you see, you've just been patient and you just let the market show you that potentially now it wants to shift bullish. So this is where now I have so much more confidence looking for positions, right? It's just a lot easier for me. So at this point, I set an entry order on the M5 just to clean it up because the M1 was just very unclear. And this just keeps it nice and simple for me. So this is what I have my order on, quick 3-hour trade, just trying to target up towards these highs. Or your other option is to look for, like I said, because we have a new M15 POI now, right? So you can look for a new entry model to form within here. So I did both. So I left my M5 entry on there. And then I was looking on the M1 to see, would it give me an M1 entry model if I don't get tagged in on the M5 entry? Okay, so just put that on the M5 chart for a second. So basically just treating this, get rid of this as well, so you can visualize it. So now treating this as a new M15 POI, right, to look for trade ideas from on the M1. So I'm not looking at like setting orders on any of these M1 zones. Basically view that as an M1 risk entry now. Instead, I'm looking for something here to be built to the right, a new entry model, okay? So we chop around. Now this one was a bit, you have to be paying attention to price action here. But what happens is this candle, price comes down and it breaks that fractal low, okay? So at the very moment that that low is broken, the top of this candle becomes the fractal high. Price then comes up and causes a bullish change of character, right? So now, if I draw it on, this is a very subtle one, but you have an M1 chalk. So it's not the most obvious in the world. And we have an M1 low here. Okay, so I'll show you in the 15 seconds. So you can see that if it's a bit unclear to you. So you see how price broke the low, broke this low here. So at that moment, this becomes a fractal high. Then it takes the fractal high. So there's your bullish change of character. So now this can be your potential fake break. Now, I don't like it when the fake break is not obvious, because then I have to ask myself, how inducing is that break? How inducing is that move? But what I did then like about this is not only do you kind of have relatively equal lows here already, I know they are a bit descending, but it's better than nothing. And it starts to kind of form another double bottom here. So then I was like, okay, that's kind of decent. And then we come down. So to me, again, just zoom out a little bit. You can just see we've come into a high probability POI now, or I should say higher than before trying to trade this. We've had order flow shift. We've pulled back into our M15 POI. I'm just looking almost for an excuse to get involved now. I have my order down here on the M5 POI, right? Trying to play the M5 liquidity entry model 4. But if we don't get it, I'm happy to look for an M1 entry. What do we have? We have an M1 pullback. For me, that's good enough, equal lows. We also have the discrete M1 chock, but valid M1 chock there, just to add even a bit more confluence. I am now personally happy to look to get involved if we get the PBL fail and chock, okay? Liquidation, mitigation, see if we can get the PBL fail and chock, and then I'm happy to set the order. There we go, nice big V-shaped reaction. Again, if you're not convinced now about the M1 price action, to me this just looks super clear. I don't need to this is when I'm not questioning it. I just feel comfortable putting my risk on the table, if that makes sense. I know you probably all felt that feeling, and that's how I strive to feel about, or I only want to take the positions when I feel that way, right? When I have confidence and I've seen more than enough confluence to suggest that my idea may be playing out. So this is another example with a big thrust candle. You could move the zone to all of the candles that it engulfs, or just keep it mechanical to 2 candles if you don't want to make the zone too big. And again, you may want to refine this to 25%, but as you've seen, some of you may think that's kind of pointless because then you basically end up entering on the single candle pivot anyway. There's just a few options there. I ended up doing this. This is the way I did it. Price pulled back, mitigate the top of it, and flew. So at the moment, I cancelled my M1 order. I cancelled my M5 order. Got a little bit pissed off for 5 seconds. It is what it is. And price moved to the upside. And then this is where, again, don't just sit on the lower time frames. What is the M15 idea? Well, we pushed up and we mitigated basically the top of this range, which isn't the end of the world because obviously we expect ultimately these weak highs to go. We're going to continue bullish, but it was the way in which we rejected it. Looking on the M1, we just got this bit. I'll show you. Like price just starts shooting down. There's no M15 POI to trade from. I'm not leaving, this entry is done. This is a previous entry model. So now what you would typically look for is for like this to be a new M15 POI, right? And you would look for a new entry model within here to form, just like we did here. But that's not what we're getting. If you look at M15, it's not giving us that, right? It's just smashing straight back down in. So this is the moment, I think it was around 9 o'clock. Yeah, my session was done. I knew that nothing high probability was going to set up in the next half an hour. So yeah, I'm done. I had to run a few errands. Like I'm not even looking at anything. This is not why I'm bothered. So quite a long recap. If you're not comfortable with 3 types of structure, for whatever reason you're new or whatever, then this can seem a bit confusing. And when you try and explain it, it just seems so unnecessarily complicated sometimes. And I get it. But when you do understand it, you can quickly make your decision of, okay, this is a swing structure. We're bullish. We pull back to discounted prices. There's a decent chance now, right? If we're going to continue that, we're going to hit that high. There's a very, very decent chance of that. The problem with that, though, is that the larger internal structure is bearish. It's quite a corrective pullback overall, so this high may hold to get one more leg before we go, or of course, the 4-hour chart overall is bearish, so we do have to bear that in mind, okay? So these are questions and doubts that you have about potentially getting long, but we do have this kind of small internal structure that is bullish, where we can potentially look to see and play that idea if we're going to go. But ultimately, there's conflicting biases here, so I just want to look for quick in and out trades. I'm not trying to have big targets. This was the only POI we could play the idea from. It was a straight push, equal Asia lows behind it. So I'm already a little bit cautious about this. Since session open, we just start starting off with strong momentum. So it doesn't mean that we can't look for longs. It's just that on the M1, right, I'll get rid of all of this for a minute. And I'm just going to quickly redraw that. But looking to play from this M15 demand zone. If I could summarize it all for you to try and keep it simple, because I know there's a lot to take in. It's that just be cautious when you're taking M1 entries. If there's just clear momentum to this, and you can see like a clear pullback here, price comes down, and by the time then you're looking to get tagged in, price is already back in this supply range. Just have a think about whether or not you personally want to trade against that confidence, because sometimes this will play out and sometimes it won't, right? It's just another tricky thing about trading. You don't always want to wait for all of the stars to align, because sometimes you'll miss the move. But when we're in a scenario like this, where it's a bit more range bound, there's conflicting biases, and those doubts we had about the POI itself for the liquidity requirements, that's where you may want to exercise a little bit more caution, especially if you kind of just like M1 corrected price action like this, right? We can see that it's a move. You may want to decide to not trade against that, okay? So that's where I keep it simple. Just wait for the M5 order flow to shift, and we eventually got that. Like, I'm not trying to do any madness with liquidity entry model 4 on the M1. I'm just keeping it simple. And the M5 is a time frame I'm really falling in love again, especially with all the testing I'm doing lately. And just look how nice that is, right? Nice and clean. You have to get any of that headache with that. We get the sweep, we get the bullish break on the M5, which was nice because it was also an M15 chock, gave us fresh M15 demand, and you could either set the entry on the liquidity entry model 4 for the M5. So it's basically playing the sweep of the M15 POI. There's your PBL fail. There's your M5 LQ EM4. Otherwise, you just treat it as a brand new M15 POI. Right, this is your M15 POI, and you look for an entry model within here. Obviously, this is super tight M5 price action, so you're not going to get another M5 entry model. So that's where you would either leave it as the EM4, or if you're an M1 trader, that's when you can look for a new entry model. Now, there's probably ways in which you could justify, leaving maybe orders on these zones, but for me, it just on the M1, it doesn't make so much sense. There wasn't, for me, the entry model 4 was here because this was the PBL that took out the low. That's the PBL that fails. There's no flip. So you would set your entry order on the extreme. Like, to me, this is just irrelevant price action. I know some of you were saying that this is the PBL, but if you're saying that that's the PBL that liquidated this low, then okay, that makes sense. But if you're saying it's the PBL that liquidated the fake break equal lows here, then for me that's not valid because liquidity entry model 2 is no longer valid once the POI itself fails. So the devil's in the detail there, but that's why I'm saying I wouldn't get too caught up in all of that. I would be looking more at like the slightly bigger picture, which is the M5 and the M15. And for me, once we got that bullish M15 chock, fresh demand, I'm like, okay, let's go now. Now I'm happy to get along. It makes way more sense. The market's kind of, shown me a lot more bullish signs at that point, and it's just a lot more simple. So I'm hoping I haven't confused too many of you there. Sometimes price action just is a little bit tricky like that. It is what it is, but there are ways we can trade the market a bit ugly. So yeah, let's see now if we are going to continue to the upside, or if it's going to be a bit more range bound, potentially sweep this high into the supply and then go. It's all a bit conflicting, and it's hard. It's hard to know what to do in these scenarios. So that's why I wait for price to come down to a good area of value to try and play that long idea, wait for order flow to shift, and then if the risk reward is there, try and hit it and get tagged in. So that was my view. That's just how I played it. I hope you guys took some value from that, and I'll see you next one. Cheers, guys.